Ladies and gentlemen, good day and welcome to the Deep Industries Limited Q3 and 9 months FY'25 earnings conference call hosted by Adfactors PR. From the management, we have Mr. Paras Savla, Chairman and Managing Director, and Mr. Rohan Shah, Director Finance and CFO, to take the discussion forward. I now hand the conference over to Mr. Paras Savla from Deep Industries. Thank you, and over to you, sir.
Good evening, everyone. It gives me immense pleasure to speak to you all today as we present our third quarter and 9 months performance for the financial year 2025. Thank you very much for joining this call. I hope you all would have reviewed our quarter 3 and 9 months FY'25 results and investor presentation, which are available on our website and on the exchanges. I am also joined by Mr. Rohan Shah, Director Finance and CFO, who will assist me in answering your queries. After my brief, he will share the financial performance of the company in detail, and we will then take your questions. Globally, the energy landscape is witnessing a shift with the election of Mr. Donald Trump as President of the United States. His administration is pro-oil and gas drilling policies are expected to accelerate exploration activities worldwide. Additionally, the imposition of new sanctions on Russia has impacted crude imports for India, further emphasizing the need for in-house oil drilling and production capabilities. These developments reinforce the importance of bolstering domestic energy resource and infrastructure. Mirroring the fortunes of the sector in US, India too is witnessing a slew of reforms intended to draw in private and foreign companies to the upstream sector. The third quarter of this financial year saw pivotal reforms in the oil and gas sector, most notably the introduction of Oil Fields Regulation and Development Act Amendment Bill passed in Rajya Sabha in December 2024. Originally enacted in 1948, the updated legislation seeks to modernize India's energy framework, aligning it with global standards. By establishing a streamlined regulatory structure, the bill aims to boost investor confidence, minimize bureaucratic hurdles, and promote initiatives such as hydrogen production and carbon capture. Key measures include stable petroleum leases, a formalized dispute resolution process, and incentives for enhanced oil recovery techniques. These reforms are expected to lower costs, stimulate domestic exploration and production, and improve the viability of marginal oil fields. By fostering innovation and attracting global investment, the bill could unlock untapped hydrocarbon reserves, strengthen domestic capabilities, and fortify India's energy security. As we look ahead, our focus remains on enhancing operational efficiency, leveraging technology, and pursuing opportunities that align with India's evolving energy needs. We continue to explore opportunities in production enhancement contracts, starter hiring of entire gas processing facilities, and integrated project management services, the three segments that are expected to drive our growth over the next few years. We believe the ongoing policy support, coupled with favorable market dynamics, provides a strong foundation for sustained growth in the sector. With this, I now invite Mr. Rohan Shah to provide a detailed overview of the financial performance for Q3. Following his remarks, we will be happy to address any questions you may have. Thank you.
Thank you, Parasbhai. Investor friends, thank you for joining the call today. Happy to share with you another stellar quarterly and 9-month performance of Deep Industries Limited. All the comparisons are on year-on-year basis, which would provide fair evaluation. Consolidated revenue from quarterly and 9 months operation rose by 47% to 154.8 crore and 33% to 408.9 crores. The strong growth momentum in top line comes from execution of orders as well as consistent new order flows. Tight control over costing and operational efficiencies have helped us post 53.1% growth in EBITDA to rupees 75.3 crore in quarter 3 with EBITDA margin of 46.1%. For 9 months, EBITDA has shown growth of 37.9% to rupees 201.3 crores. We have been maintaining margin in this range of 46%, providing us a decent cash flow to strategize our future growth trajectory. Net profit for the third quarter and 9 months stood at rupees 47.6 crores, up by 70.4%, and rupees 127.9 crores, up by 44.6%. Our order book has grown to rupees 2,701 crore, 125% on year-on-year basis. The financial year 2025 is shaping up to be a pivotal year, with the company on track to achieve its highest ever revenue, EBITDA and net profit. Supported by favorable government initiatives in energy sector, we are well positioned to sustain our growth momentum. Our third quarter performance has further reinforced our financial strength, driven by robust revenue growth and improved profitability. By maintaining a disciplined focus on cost optimization and operational efficiency, we remain committed to delivering consistent value to our stakeholders. With this, I now open the forum for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Mukesh Panjwani from WC Securities. Please go ahead.
Yeah. Hi, sir. Am I audible?
Yes.
Yeah. Congratulations, sir, for great set of numbers. My first question is on the status of Barge. Like, what is the status right now? And have we secured a long-term contract, or still we are exploring opportunities in it?
So as we had updated the status on Barge, we have completed almost, I believe, more than 95% of the work. Unfortunately, we are waiting for only one of the equipment, which is a little critical equipment that has to come from US, and that has taken a reasonably a little long time. But however, we maintain our status that we should be able to get certain portion of revenue for this quarter. Barring that, it has got a little delayed, but now it's completely now on track.
Okay. So by when can we see the deployment?
As I mentioned, this should be happening only in this running quarter. So we'll definitely be having the glimpse of the revenues coming in for this quarter.
Okay. And what kind of revenues now we should expect? Now the market scenario has changed, so still we can expect the last quotation you have given us, or we should expect something higher?
We purposely kept this area open, because the markets are very dynamic. We had an opportunity to close the deal, but we thought that it is more feasible for us to wait by the time we have our barge ready. So, just to comment on what kind of numbers would be very difficult, because we are also trying to explore if we are able to get a little higher rates to what we are anticipated. But having said that, we do not have any confirmative answer to that whether it would be in the same range or would be a little higher.
Okay. And my next question is, sir, about our new vertical, that is production enhancement contracts. So how this vertical can become?
So this vertically basically is an operation. We are given around 8 oil and gas fields in the area of Rajahmundry, and there is certain amount of gas production which is happening today in the block currently what ONGC is operating. And the nature of the block is the production has declined for various or several reasons. Our job is largely to undertake that field, enhance the production, and then we have a sharing model of whatever the production that is enhanced from the levels that we have taken. So we are very, very optimistic about this block, about the production and the potential that we have reviewed, and we think it is going to become one of the largest growth drivers as we go forward.
Great, sir. And any bidding pipeline for this kind of contracts that you can share?
We have not bidded any PECs as of now, but there are few PECs that have already come in, and there are many more to come in. So our focus definitely would remain on bidding these kind of opportunities, which gives the clarity over a period of 10, 15 years or plus. And with the kind of experience and the expertise that we have in operating the fields with the kind of equipment that we are running currently in the market, we have an upper end to optimize the best out of these fields.
Okay. And sir, what kind of revenues can we expect from this ONGC PEC contract in FY'26?
We are taking handover of this particular field by end of this quarter, and we'll start operating on this, and we'll start applying our expertise to increase the production. So primarily for FY'26, we are anticipating revenue of around 6 months or so out of this PEC. So initial revenue would not be that great, but from FY'27 onwards, we can expect more than 100 crore out of it.
More than 100 crores. Okay, sir. And sir, in upcoming year, what kind of growth we can expect?
So we are all set for growth trajectory based on our existing order book and the new orders which we are expecting to be awarded. We are expecting growth of more than 30% year-on-year for next 3 years.
Okay. That's great, sir. That's all from my side. Thanks a lot and all the best.
Thank you.
Thank you. The next question comes from Siddhant Shah from Optimum Securities. Please go ahead.
Hello, can you hear me? Hello.
So you're sounding a bit muffled. If you're using the speakerphone, may we request to use the handset, please?
Yeah, I'm actually using the handset. Is this better?
This is much better. Please go ahead.
Yeah, hi. So I just wanted to understand a little bit more on the growth trajectory. Apart from the acquisitions, like apart from the barge and the production sharing contract, how much organic growth are we expecting from our business?
So organically, we are growing almost 18 to 19% year-on-year. So my traditional services, both in natural gas and integrated project segment, they are growing with around 19 to 20% year-on-year.
Okay. And like this production, and you mentioned that the production enhancement contracts will come going ahead. Will the size of these contracts be similar to the one that we won right now? What will be the opportunity size in that segment?
Sorry, I cannot hear your question clearly.
Siddhant, sir, you're sounding...
Is this better?
Yeah, this is better, sir. If you're...
Okay. Yeah. So just wanted to check the production sharing contract that we won recently, and we are expecting this segment to grow going ahead. So the order that we win in this segment, the nature of the order, will it be as large as the order that we won recently, or are there going to be smaller orders in this segment also?
There could be a mix of the orders depending on the kind of field. So it could be even smaller, and it could be even much larger to the one that we have got. So that is basically dynamic. It cannot be static. It cannot be the same numbers because the fields are different, and the activities involved could also be different.
Okay. Okay. And just on a ballpark timeline, by when can we expect these kind of orders to start coming in? I mean, maybe next FY'26 onwards, can we expect more of these orders, or it will be more further on ahead?
As I mentioned, there is a huge thrust on government to enhance the oil and gas activities. Having said that, bringing out these PECs has already been now, the process had already started. So it's about the timing. I believe, and it's my expectation that within a year we can see some of such PECs coming out and getting awarded. But to time out exactly when that is going to happen, it would be a little difficult.
Got it. So just approximately in a year's time, maybe there should be some movement is what you're expecting, right?
It can be a good guesstimate.
Okay. Okay. Thank you. That's all from my side. Thank you.
Thank you. The next question comes from Raghu from Travest Capital. Please go ahead.
Hi, congrats on a great quarter. Most of my questions are answered, but I just want to ask a kind of a long-term question for the next 2, 3 and above years. Are we going to enter into fields like shale and coal bed methane now because it is coming under a common license? So with the present rigs what we have, can we do the shale exploration? What is your view on this particular topic?
Those areas are something that India definitely is going to discover in certain period of time, and I don't see that opportunities to be very far, because India has is poised to increase the energy sector by ramping up more and more of these activities. So definitely CBM or shale being an unconventional products or unconventional ways of drilling would become more popular. And I think if you talk about CBM today, I think it's already in the play. I mean, there are big companies already producing a huge amount of quantities, including ONGC in Northeast Belt. So I think shale is not very far. We are just there.
And how far can we, maybe 2, 3 years? I'm talking about specifically the capability being developed for deep.
So the methodology of drilling either the natural gas wells or oil and wells and the CBM or maybe shale, the theory remains the same. So there is nothing in terms of having an extra ability or a capability to drill these kind of wells or do these kind of activities. That is absolutely doable, and we can easily do this.
Okay, right now we have the capability to even go for shale gas drilling.
Oh yes, absolutely.
That's great. That's great. I hope we get some orders there. Thank you.
Thank you.
Have a great quarter.
Thank you. The next question comes from Nirvana Laha from Badrinath Holdings. Please go ahead.
Hi. Thank you, sir, for the opportunity, and congratulations on yet another very good quarter. Sir, all my questions are regarding your subsidiary, Dolphin. So in the last Concall, sir, we had spoken about Dolphin's revenue potential for H2. And Rohan, sir, you had said that $2 to $3 million revenue should be possible in H2. But this quarter itself, we seem to have booked about $3.5 million. So if you can give some outlook for Q4 for Dolphin's revenues without Prabha, what kind of revenues can we book? And without Prabha, next whole year for Dolphin, what kind of numbers are you looking at? Do we already have an order book? Some clarity on this, please.
Yeah, hi. So in Q4 also we can look for revenue of around 2 to 3 million in Prabha without the barge revenue. And with regards to next financial year, the revenue would majorly from barge. This particular opportunity which we are working as of now is not recurring opportunity. And so as of now we cannot comment that in next financial year what other revenues we can book other than this barge.
Sure, sir. So apart from this quarter, will this current Achetin class contract, will it get exhausted after this quarter, or do we have another couple of quarters visibility after this?
Yeah, so the current opportunity which we are working would be exhausted by end of this financial year. And if we'll get another such opportunities, we can definitely book revenue. But as of now, it can exhausted by this financial year end.
Got it, sir. And sir, can you give me the receivable figure for Dolphin as of Q3 end? As of H1 end, it was 164 crores. So can you give me the figure after Q3?
So the old receivables which we were expecting to receive has not yet been received. So those receivables would be which we expect to be received in current quarter. So receivables would be almost in same line. Maybe the recent revenue has been received.
Okay, sir. So, sir, you had said that you have won arbitration awards of around 33 to 35 crores. So that cash has not yet been received, is it?
Yes. So it is under process for recovery from client. Order is already in our favor. So we are working on it to get the actual money.
Okay, okay. And sir, H1 revenues of 25 crores in Dolphin, those were also outstanding as of H1. So have they been collected?
Yes. Majority of that have been collected.
Okay. All right, sir. Amazing consistency, sir. Wish you all the best for the next quarter and the coming years as well. Thank you.
Thank you.
Thank you. The next question comes from Vimoksh Shah from Goyam Labdhi Fintech. Please go ahead.
Yeah. Thank you for the opportunity and congratulations for the great set of numbers. So I think most of the questions are answered, but still I have two questions. First one is like the company has entered into the JV with the Eurogas system, right? And so how will this JV contribute to the company's growth and new capabilities will it bring to the DEEP?
So with JV with Eurogas, we had bidded few projects for supplying gas processing equipments, but we didn't get award of it. So as of now, we are just awaiting for few such tenders to be bidded under JV. So not sure how it will shape up in coming future.
Okay, okay. And is it safe to assume that at least 30 to 35% growth for the upcoming financial year as well?
Yeah, so we are quite optimistic based on our existing order book and the expected orders to be received. We believe on consolidated basis we should grow more than 30%.
Okay, okay. And one last point is like recently you filed for the QIP, right, for the 350 crores. So what is the specific intent for this QIP and what is the timeline for this fundraise?
So for next financial year, we have capex plan of more than 500 crores, which is for the projects which we have already awarded and few of projects we are expecting to get awarded. In addition to the capex, we are also evaluating two such opportunities of acquisition of other businesses in our industry itself. So we would need some funds for acquisition as well. So all put together, our requirement shaping up more than 500 crore, of which we are planning to raise around 350 crore through equity, and balance will be utilizing our internal approvals, and maybe we'll take some debt as well.
Okay, got it. Yeah. Thank you. And all the best for the next quarter.
Thank you.
Thank you. The next question comes from Pankaj Motwani from Equirius Wealth. Please go ahead.
Yeah, thank you for the opportunity. My question was on like in the earlier concalls, like you were mentioned that around 108 crores of arbitration award from ONGC was expected to be received. And like after reading annual reports, I found around 85 crores has been disclosed under the other current liabilities. So like my question was like why this amount has not yet been recognized in the P&L statement?
Correct. So we had received an arbitration award in our favor for 108 crores, of which 75% amount has already been received, which has been parked under other current liabilities, as you rightly mentioned. We have not yet accounted that as income because ONGC had challenged that arbitration award in higher court. So we were just waiting for the award of higher court to be coming in our favor. And once it is crystallized that it has been awarded finally to us, we'll book that particular amount as our income.
Okay, got it. And one more question,
interestingly, we have received order from court also now in our favor. So we are just waiting for the final order to be served to us, and we hope if our client will not approach even higher authorities, then we have to book that in our revenue.
Got it. And one more question, like what is our current bidding pipeline as on this quarter?
So our current bidding pipeline is in range of around 700 to 750 crores, which we expect to get converted in next 3 to 6 months.
Okay.
Based on success rate. Yeah.
Thank you.
Thank you.
Thank you. The next question comes from Manan Shah from Moneybee. Please go ahead.
Yeah, hi. Congratulations for a wonderful set of numbers. Most of the questions are answered, but I still have few questions. So, first question was relating to Dolphin. In Dolphin, in standalone, you've booked some 11 crores of revenue. Is that also pertaining to the same to bring one asset in class, or it is a different revenue that you do? Because in the standalone, the margins are relatively lower than what you had guided for this type of contract that we're executing.
Yeah, so in standalone, it is different than which we were discussing. So in standalone, we have booked revenue out of one small contract of fabrication work, and we have booked almost 50% revenue in Q3, and we are expecting another 50% to book in Q4 out of that small opportunity in standalone Dolphin.
Okay, understood. My next question was relating to this production enhancement scheme. What my understanding is that for the current level of production, we will receive some sort of service revenue. Is that understanding correct?
Correct. So for current level production, we'll get fixed amount to maintain those levels, and we'll get share in incremental revenue.
Okay. So what will that amount come to? Because the current level of production, you must have an idea. So this is something which will be more or less predictable that we will get for the next year or whenever we commence this contract. So what sort of number will this be, and what will be the cost to service this revenue?
So the revenue or fixed price which we will be getting to maintain the existing level of production would not be that lucrative. It can take care of the cost which we would be incurring to maintain that. So our bullseye is on incremental production.
Okay, understood. And my last question was on in this presentation we've highlighted on the offshore services that we are looking to get into. If you can elaborate a bit more on that, where are we focusing and what sort of opportunities exist over here, that will be really helpful. Thanks.
Yeah, so with an acquisition of Dolphin, we have started entering into offshore segment with our first services under category of marine services, where we are planning to add fleet of some tugs and vessels like diving support vessel and platform supply vessel and anchor handling tugs. So our plan is to add these equipments in our fleet one by one and to put them on charter. So with marine services, we would be entering into offshore segment.
Okay. So these assets, do we already own these assets, and would we need to refurbish them, or we have to acquire these assets?
So one anchor handling tugs we have already acquired, and we have acquired under Dolphin's subsidiary with JV with some international partner, and that tug will start operation by end of this quarter itself, and eventually we would be adding few more equipments in coming time.
Okay. So here the contracts are again long-term in nature, or these are more shorter term, and what sort of margins can we expect to make in these type of services?
So contracts are available for both long-term and short-term. Depending on the time and opportunity, we may choose entering into for long-term or short-term. Margins are quite lucrative. They are more than 50% EBITDA margin business.
Okay. Understood. And any ballpark number that you would like to put that this asset can generate?
So little difficult as of now. I don't have those numbers in hand, but we can definitely share eventually.
Sure. Thanks. I get back in the queue if I have any more questions.
Thank you.
Thank you. The next question comes from Sahil Jain from Seven Islands PMS. Please.
Hello. Hello. Am I audible?
So there's a lot of background noise.
Wait, just a second. Am I audible now?
This is sir.
Hello.
Yeah. Little background noise is there.
So you're
Just a second. Is it better now?
Yes, sir.
Yeah, I just wanted to ask a question related to the QIP. So by any chance, do you have a breakup for the funds which the company will utilize from the process came from the QIP and the timeline for the same?
So I already explained the requirement. So largely it would be required for capex and one acquisition opportunity which we are on advanced discussion. Hello?
Yes, sir.
I think we can ask you to connect again.
As there is a lot of disturbance from the line of current participant, we'll move on to the next question. The next question comes from Shaurya Punyani from Merger Partners. Please go ahead.
Hi, I'm audible?
Yes.
So just two small questions. So you mentioned you had a big pipeline of 700 crores. So what is the success rate usually we have?
See, generally it is almost 50% is what we believe our success rate is, depending on different verticals. In some vertical, we have even higher success rate. So, on an average, you can take as 50%.
Okay. And so what are the margins we are looking forward? Like currently we have 46, so till what we can expect improvement?
So, yeah, we are quite hopeful to maintain this type of margins. So it should be in range of 45 to 47%.
Okay, sir. Thank you.
Thank you.
Thank you. The next question comes from Vile Rai, an individual investor. Please go ahead.
Congratulations on the great set of numbers. I have a couple of questions. Can you please share the broad range for charter rate of barges similar in size to Prabha?
So, there are two active options which we are evaluating for barge. Like, if you go for all-inclusive rate, where you'll have to handle OPEX as well. So they are in range of $50,000 to $60,000 a day. And if you opt for net of OPEX kind of rate, they are in range of $30,000 type.
And sir, how have the rates been historically? Are we seeing higher rates these years compared to the previous years?
Yes, of course. I mean, the rates have definitely gone up. And particularly, I think we had mentioned in the earlier call that the kind of bars that we have is, it's called a DP bars, which is called dynamically positioned bars. So these kind of barges are very rare in the globe. So they definitely command a higher rates as we go forward. So historically, if you have seen, the rates have been always on the increasing trend.
Okay. And sir, can you also please share what is the amount of capex we need to incur for our production enhancement contract?
For production enhancement contract, we are estimating capex of around 160 odd crores, and this we would be doing in 2 years' time.
Okay, sir. And sir, are there any difficulties that we might face for getting our incremental production, and will there be any penalties if we do not achieve the level?
So difficulties we are not foreseeing, because this field we know for more than 15, 20 years now. And the way we have evaluated the field and production, we believe will not have difficulties in increasing the production. There are no such penalties for not increasing production.
Okay, sir. Thank you. That's all from my side.
Thank you.
Thank you. The next question comes from Santanu Saikia from IndianPetroplus.com. Please go ahead.
No, I was just wondering, Oil India Limited has come out with a rig for 3,000 horsepower, and there's a new set of rigs which are coming out, and you're in the rig business very much, which are from ONGC with a 6-year contract, so asking for new rigs. So, for new rigs at 6 years, you can probably amortize your entire investment. So are you looking at these kind of investments? 3,000 horsepower rig is a huge investment in your, and then if it's a long-term contract, there also you would possibly gain. So are you looking at these kind of contracts?
So we are evaluating various opportunities, because what we are seeing these days, there is a lot of demand coming in, not only in 3,000 horsepower, but 2,000 horsepower, 1,400 horsepower, 1,000 horsepower, and in various areas. So we are trying to evaluate that how we would be able to participate, and whether in what area and what capacity of rigs is something that we would be able to comment only after a reasonable passage of time. But for now, we are poised with this kind of demand. And as we see, I think all the operators across India have experiencing a complete deployment of the existing equipment. So there is definitely a lot of opportunity in the market. Having said that, we are analyzing in which area, in which segment, or in which capacity of rigs we should be bidding as we go ahead.
So if you were to look at a 2,000 horsepower rig, the new set of rigs that are being advertised for, a new rig is going to be considerably expensive. So then would you be able to have the capex to be able to, buy a rig like this for a back-to-back deployment? Because, because then it will be way above your 500 crore capex that you are looking at.
As you would have heard, we have kept that cushion already with us. Our debt equities are well under control. Currently, as we speak, our debt is almost, we can say that we are net debt free. So we have a good opportunity and good possibility of raising debt as needed going forward.
All right. So have you deployed your barge already? I'm sorry, I came late in the conference.
No, it's not deployed yet. We are evaluating the opportunity of getting the better rates.
Okay. In Indian waters or all over the world?
Currently, we are trying to deploy this barge into international waters.
Okay. Because in India, demand has to come up for that kind of barge, right?
Yeah, absolutely. I mean, the demand is across.
Demand mismatch perhaps with India. You'll be probably more comfortable in India, right?
So the kind of vessel that we have is a very unique vessel, and this kind of vessel can command higher rates in international waters than in Indian waters. Moreover, in international waters, the workings are almost 10 to 11 months, whereas in Indian Motors, the season is close to around 8 to 9 months. So we are trying to evaluate what best options we can get and the kind of revenue that we can get for the company. And basis that, we'll decide in which area we should deploy it. But for now, our intention is to get into only international waters for now, for the DP barge that we are talking about.
That's right. So are you understanding the market properly? Because it seems like a pretty complex market with demand supply, going up and down, and depending upon crude prices, depending upon E&P opportunities, etc. So do you have a full understanding of the market, or are you still understanding the market?
We have a reasonable understanding on the market.
Okay. Now these, platform supply vessels, etc., will it go with your barge, or are you looking at the Indian marine freight market here?
Today, as I mentioned, this barge, the one that we are talking, we are not trying to get it into India for now. So, getting aligned with the platforms that are available in India is currently out of question. But going forward, if we think that there are opportunities where we can deploy more barges which are aligning to the requirement of the current platforms, we'll definitely evaluate that and go forward.
No, I'm talking about your acquisition of tugs and platform supply vessels. Will it be part of this barge deployment, or will it be a separate deployment in Indian waters against ONGC tenders?
We have secured both separately. We have not combined it.
Okay. So have you deployed the barge already? The tug that you have got as a joint venture?
It's almost finalized, and as mentioned, we'll be getting some revenues in this quarter, in the current quarter.
Is there a private deployment or a public sector deployment?
It is not in India. It is in around Mexico.
All right. So you are essentially looking at an entirely different market segment from the market segment that you are comfortable with, which is the Indian market segment, right?
The reason being, because we had this barge working in Mexico, our first choice was very clear that we try and evaluate the markets in Mexico. But since we have already entered in this market, we will definitely try and work out opportunities that we get in India. So basis that, we'll keep buying the barges and the vessels, whatever is needed, and deploy it here.
So by when do you think your barge is going to be deployed roughly?
As I mentioned, it would be deployed in this current quarter itself.
The current quarter itself will be deploying it. Okay. So you're in active negotiation for deployment, basically.
Correct.
Or have you got a contract in hand, or are you in negotiation with a contract?
We are almost on last stages of negotiation.
Okay. All right. So that's all I wanted to know. Do you think the gas compression business has become a little commoditized in the sense of, there are too many players in the business, there is a lot of undercutting of prices? Sometimes we see that your quotations are higher than, most of the other Johnny-come-lately kind of players in the market. So what's really happening in this gas compression, and what is it called, when you take out the water vapor from it? I don't know what it is called. So that business where you started, in fact, along with the rig business. So how is that business doing?
It's doing very well, and we have been strategizing it, looking to the demand supply. And as I mentioned, we are still holding a reasonable amount of market share in that segment, and I think we'll continue to do that.
Okay. And in the rig business, are you planning to acquire?
Sorry to interrupt us. Sir, may we request you return to the question queue for follow-up questions?
Okay.
There are several participants waiting for their turn. Thank you. The next question comes from Gaurav Sachdeva from Sajak Fund House. Please go ahead.
Yes. Am I audible?
Yeah.
Hello.
Yes.
Sir, as you said, you will be requiring 500 crores for the expansion and 300 to 350 crores to QIP and rest of through internal accrual. So what will be the source of the internal accrual? Will it be cash flows, or will we be liquidating our investments, which is already around 170 crores?
Yeah, so it can be both. Cash generation out of business, and we may utilize some investment as well. In fact, we have kept open option of taking debt as well.
Okay. So can you tell me how much investment will be liquidated?
That depends on the timing of the CapEx or the requirement which will be shaped up in next financial year. So it cannot be said upfront that how much investment we would be liquidating. But as and when opportunities kicks in and the liquidity available on that particular date, we can take decision.
Okay. And sir, are we still targeting 800 crores revenue by FY'26, as you said in the last con call?
Yes.
Okay. And any opportunity in the offshore wind segment we are getting? Since the government is pushing in the offshore wind through our Dolphin Offshore, are we getting any opportunity in this sector?
No.
So there are a lot of opportunities already running in the market, and we are trying to evaluate it. But for now, our intention is to get only into the charter hire business of these barges and tugs and all those stuff.
Okay. Okay. Thank you, sir. That's from my side. Thank you.
Thank you. The next question comes from Raghu from Travest Capital. Please go ahead.
Yeah, I just have a follow-up question regarding the QIP and the debt. Just forgive me if my calculations are off. I think we something around 150 to 200 crores of cash flow in the next 12 months. And we have a QIP for 350 crore. So why are we liquidating so much, about 10% of equity, when we can easily raise about 100, 200 crores of debt, and you have anyway 200 crores of cash flow coming in? Please, can you explain me your understanding of why it is so high, the QIP?
As I mentioned, the markets are very, very dynamic these days, and the kind of demand and the demand of the services, the way it has evolved, we feel that in a period of next year or two, there would be immense flow of orders to come in. We feel utilizing whatever the current cash flows are, along with the equity that we are trying to raise, will definitely need a huge amount of debt also going forward. So we feel that it's always better to have an amount of liquidity on hand, because it could be also used to acquire, as I think we had already mentioned in the call earlier, that we are looking in some opportunities to acquire some ongoing businesses. Of course, it has not finalized yet, but the market is very, very dynamic these days. So it's always better to have the liquidity on hand, so as the opportunity gets finalized, you can always use that funds to acquire the businesses.
Okay, fine. It's because the demand is just too huge for executing the orders. I get it. Okay. Thank you so much. Thank you.
Thank you. The next follow-up question comes from Vimok Shah from Goyam Labdhi Fintech. Please go ahead.
Yeah. Thank you for allowing me for the follow-up question. So company is expanding the onshore drilling business as well, right? So can you please provide an update on the company's current onshore drilling assets, and what is the expected capital allocation for this segment over the next 1 or 2 years?
So onshore rigs, we are into this business for more than 15 years now. And currently we are doing capex for acquiring 3 rigs, which is already under progress. And with a recent award, we are adding 1 more rig in coming financial year. So depending on the awards, we would be adding few more rigs in coming financial year. But since in our business, capex is generally backed by awards, so exact number we cannot quantify as of now.
Mm-hmm. Okay. Yes. Thank you.
Thank you.
Thank you. The next question comes from M.N. Kumar, an individual investor. Please go ahead.
Sir, this is related to ONGC contract, where you are going to do the management of the current production. But as the fields are quite old, Godavari Delta fields, if there is a drop in the production from the current level, is there a penalty associated with that particular contract, sir?
So I think I have answered this question earlier. So we believe there are no such penalties on reduction of production. So but our interest and opportunity is in increasing the production because we get revenue share in incremental production. And the study which we have done on this particular field, we are quite positive that this field we can easily start increasing production.
I got the second part, sir. First part, I just wanted a double confirmation. So do we have the geologists which are needed for making all the decisions about what kind of a technology to be deployed for increasing the production? We have been, my impression was that we are an asset company which we keep leasing to the people for usage, and they make the decisions and we execute. Am I wrong in that one, sir?
No, we have a group of geologists and reservoir engineers also as a part of our company. So while we are using our equipment diligently to enhance or increase the production, but that definitely requires a lot of understanding on subsurface or the geology. So we have a team of those experienced team who can help us identify what we need to do to increase production.
That's great, sir. I didn't know the strength of this particular company. Thank you, sir. The second question is related to Sealant project, sir. I think it is going to be executed maybe next 1 year or so. Where is this located and how many rigs we have to deploy? Can you throw some light on this one, sir?
So for now, we have dedicated one rig for Sealant, and largely the wells that we are going to drill for them would be in around Gujarat region, barring 1 or 2 wells that we are going to do in Northeast. But the rest of the entire wells are going to be done in the area of Gujarat.
Thank you, sir. Congratulations on a great set of numbers, and it gives more confidence saying that the same tempo of growth is going to be seen more. Maybe we will even increase the rate of growth even further next year. Thanks, sir. Bye.
Thank you. The next question comes from Srikar, an individual investor. Please go ahead.
Sir, am I audible?
Yes.
Sir, it's regarding our inorganic expansion, sir. So, whom are we trying to, take into our things, like a rig owner or a seismic data provider or a maritime services provider? I mean, which company are we having, sir? I mean,
it won't be possible for us to disclose to whom we are currently talking with because the deal is not yet finalized. But just to give an idea, it would definitely with the equipment or the asset holders in various areas. So those are the target companies that we are looking at.
Got it, sir. So, the next one is regarding our FY'26 guidance of around 800 crores. We just said that around 6 months of PEC is going to be executed in the FY'26, which is not going to cross 100 crores as per the management. So how are you going to reach that number, sir, around 800 crores?
Yeah, so we are expecting full year revenue from Dolphin's barge in FY'26. In addition to our growth in our existing business and as I said, around 6 months revenue from production enhancement. So all put together, we believe 800 crore is it's very much achievable.
Okay. Will there be any guidance cut for this particular year, sir? Because earlier we were guiding like 570 to 575 CR. So is it going to come down this year because the barge is getting delayed?
Yeah, so we are still holding the same number as in guidance for this financial year. We believe we could achieve that.
Thank you, sir. The last question is regarding PEC from Oil India, sir. It was supposed to end today, the contract. Did we bid for it, sir?
I think for some reason, I'm not very sure, but I just saw the email today that the PEC, that one has been cancelled. I think there would be some additions and modifications probably coming up, and that is probably the reason that they have cancelled this PEC. And in all probability, it seems that they may come out with the new one with some modifications.
Okay. Thank you, sir. Thank you. That's it from my side.
Thank you. The next question comes from Vilay Rai, an individual investor. Please go ahead.
Thank you for the opportunity. Sir, can you tell the amount that has been spent on the renovation of the barge? So
we have spent till now around 115 crore on the barge refurbishment.
Okay. And can you also give a broad range at what price level we might be able to sell our incremental production from our production enhancement contract?
So currently, natural gas is being sold at around $13 MMBTU, and we believe we'll be able to sell the gas in the same range or whatever market price would be prevailing at that particular time. Hello.
So the line for the current participant has been dropped from the queue. And as there are no further questions from the line of the participants, I now hand the conference over to Mr. Rohan Shah for closing comments.
Thank you everyone for joining this call. It was a pleasure to respond to your questions. And if you have any further queries, you can definitely approach us through Adfactors PR, or you can directly connect us as well for any further queries. We would be happy to answer all your queries. Thank you.
Thank you. On behalf of Deep Industries, that concludes this conference. Thank you for joining us. You may now disconnect your lines.